Almost everyone has at least one relationship with one financial institution. Practically all businesses, regardless of industry, require financial services at some point in time, be it credit cards, bank and time deposits, loans, insurance, or investments. But financials go beyond these. It evolves through technology, and rapid innovation has given birth to a long-term trend called fintech or financial technology. Fintech is a powerful trend. Electronic payments are steadily growing with a lot of room to grow exponentially. On top of this, we also have the rise of cryptocurrency and other blockchain technologies. With the ATRAM Global Financials Feeder Fund, investors can participate in growth of companies around the world that are involved with providing financial services. The fund gives you access and diversification to global financial names that we normally do not have locally. The fund also invests in fintech, which a normal financials fund would not. Invest in the biggest global companies in the financial industry. Participate in the global recovery. Diversify your investment portfolio by investing in this fund. Invest in the ATRAM Global Financials Feeder Fund. For more information, visit www.atram.com.ph.
The world around us is ever-changing. We are facing development challenges on a global scale. Today, 41 million out of 57 million deaths are attributable to non-communicable diseases. In the Philippines, 5 out of 10 families were deprived of basic education. The Philippines also ranked third in the top 10 countries with the most natural disasters. Women participation in the labor force is less than half at 48%, while male participation is at 77%. The United Nations identified and adopted 17 Sustainable Development Goals or SDGs to address the challenges faced by economies, societies, and the environment. We at ATRAM support the UN and the SDGs by launching the ATRAM Philippine Sustainable Development and Growth Fund. The fund is designed to invest in Philippine companies that score high in terms of the integration of UN SDGs into their operations and strategy. Through this fund, we hope to encourage PSC-listed companies to integrate UN SDGs into their businesses. We must work together to make a world a better place. ATRAM Philippine Sustainable Development and Growth Fund. Invest in a sustainable future together. Invest to thrive. Invest together. For more information, visit www.atram.com.ph.
Megatrends are shaping and influencing the global economy, urbanization, technological innovation, resource scarcity, and demographic and social change. The long-term shifts in these trends create multiple investment opportunities. They gave rise to a new type of investing called thematic investing. Enter the ATRAM Global Equity Opportunity Feeder Fund. The fund invests into the themes that would benefit the most today, making it the first global multi-thematic fund in the Philippine market. Unlike traditional investing, thematic investing is not constrained to sectors or locations, focusing instead on themes and megatrends. It distills the megatrends to find relevant topics that work in this current market environment. It finds the next big thing and invests in it at a very early stage. With this multi-theme fund, investors will have exposure to various companies that will drive future market growth. What's more, you can invest in all the new developments in this world in Philippine peso or US dollar, making it accessible to everyone. Invest in the fund that invests in the stories of tomorrow, today. Invest in the ATRAM Global Equity Opportunity Feeder Fund. For more information, visit www.atram.com.ph.
All right. So hello and good afternoon, everyone. Thank you for joining the second part of this ATRAM special webinar series. I am JP Chong, Business Development Manager, and I will be your host for today. The COVID-19 pandemic has created a crisis unparalleled in terms of social, economic, and environmental implications. Financial and environmental constraints stemming from the pandemic continue to put many important structures in peril. In addition to the immediate human suffering caused by the disease itself and the loss of livelihoods for millions, the COVID-19 pandemic has also stressed several key vulnerabilities of our societies and the economic system. We, at ATRAM, are committed in doing our part in supporting the UN SDGs. ATRAM, as voted by the members of the organization, chose 3 of the 17 SDGs, namely health and wellness, education, and climate change as our top three SDGs of main focus and interest. To show our support for these goals even further, we have created more funds that back sustainable outcomes through the companies we invest in. Stay tuned to know more about this new and exciting fund. Before we begin, I'd like to let you all know that this session will be recorded and that the copies will be disseminated and as well as posted on all our social media platforms. Also, please don't forget to visit our website, that's www.atram.com.ph, for a more detailed information about all the funds that we offer. If you have any friends that you think would like this webinar but are unable to attend, feel free to share the YouTube replay of this session and visit our YouTube channel, that's ATRAM Studio. Please scan the QR code found in front of you to visit our official social media pages. Would like to invite all of you to join ATRAM's official Viber community group, that's hashtag ATRAMPH community, to stay updated on the latest announcements, advisories, and reminders. Scan the QR code or visit the link on your screen and get the chance to win ATRAM merchandise. We'd like this webinar to be as interactive as possible, so please do not hesitate to send in your questions in the Q&A tab all throughout the webinar. Each question you send is a raffle entry for a chance to win limited ATRAM merchandise. Winners will be announced at the end of the webinar, so make sure to stay tuned until the end. We will also be wrapping up with a quick feedback survey after the webinar. So we do hope that you can share your thoughts with us about our session for today and how we can further improve our webinar series. Without further ado, it's time for us to begin the webinar. It is indeed a privilege and a pleasure to have with us today the Director and Head of Distribution of Asset Management in non-Japan Asia of Credit Suisse, Christina Kautzky. As the Head of Distribution, she spearheads consultant relations and marketing. Christina earned her Bachelor of Arts in Comparative Literature with a minor in French and graduated magna cum laude from New York University. Hi, Christina. Turning the floor now to you. Good to hear you and nice to see you again.
Hello, good day everyone. Kumusta ang lahat? Salamat sa pagsali. Thank you so much to the team at ATRAM, to our partners for bringing us here today and for inviting us to participate in what is such a groundbreaking and incredible move to allow investors to benefit from and support the UN Sustainable Development Goals. My name is Christina Kautzky. I am the head of distribution for non-Japan Asia for Credit Suisse Asset Management. And today I really want to bring you inside the way that we think about infrastructure. You can see here, we think of it as the bedrock of prosperity. And prosperity doesn't just mean economic growth, although of course that is an important part. It also means sustainable economic growth. It means rolling back the clock on climate change, and it means a greener, brighter future for our children and grandchildren. So I hope that as we discuss this today, you'll see the opportunity that we do in infrastructure and how through infrastructure we can support both the UN sustainable goals and as well as economic growth. Now, if I turn to our first slide, this is a lot of headlines. You've probably seen some of them before. They probably resonate with you. It's definitely an area that we are incredibly focused on at Credit Suisse because infrastructure investment is categorically linked to progress in climate action. The agreements like COP26 and government spending plans for progress and economic growth. One thing that is for sure is that investment in infrastructure is going one way. It's going up. And being a part of that as an investor can be a really meaningful thing for your portfolio and for the future of our planet. Just to give you an idea of how significant the need for investment is, G20 nations alone are estimated to need to spend 15 trillion US dollars. 15 trillion US dollars by 2040 to reach some of the goals that are on this page here. And so how can infrastructure help? It's about bridging the old, transport, utilities, the things we absolutely need to live and to work, with the new. Communications, data centers, the proliferation of 5G. So the way that we bring that together and the way that we support new ways of energy, new ways of transport, and the way that we do more in terms of access to communications infrastructure is going to help us meet these goals and do it in a sustainable and less carbon intensive way. If we look at slide 3, we go from high level to actually the very unique characteristics of infrastructure. Now, this is an area of listed equities where this strategy is, of course, naturally focused. But to do good, we also want it to do good for your portfolio. And so when you look at infrastructure as a component of your holdings, you're looking at some of the benefits that we've listed here. So whilst these companies are making high initial investments into projects, the operating costs, once they're up and running, are relatively low. And so that can kick off a nice income layer, which just gives people kind of a nice sense that you're not going to continue to see that capex. You see the income paying off for decades to come. There's also very high barriers to entry. So that means that for certain companies, let's say that you are good in data centers, let's say that you're one of the largest producers of solar and wind energy, it's very difficult for small companies to come in and supplant that, to do more than you're already doing. And so we look for leaders who are in areas where there are high barriers to entry. Now, that's not to say that we don't want lots of small companies to come in and innovate in this space. We absolutely do. And we also look for those who are over time going to grow into leaders. But it's important to know that leaders in this space with good management and with good ESG foundation will often maintain their leadership position. And also key to this area and for your portfolio at this time is inflation protection. We all have seen that going to the grocery store costs us a lot more these days. Buying presents for Christmas is costing a lot more these days. Inflation is there. And this is one area where you can sort of inflation proof your investments. So if I think about energy, a lot of energy contracts, if I sign an energy contract today, we already bake in inflation into the future. So every few years, those prices may reset automatically. And you're also going to lock in any tax breaks or subsidies the government is giving you today. And so you look at a way to make sure that you benefit from, even in an inflation rising environment, those price adjustments, as well as any benefits the government's giving us today. If I turn to the next slide, again, this isn't a massive universe of infrastructure companies, over 500 listed companies, with over 2.5 billion in a collective market cap. That's a lot to sift through. And so what the team at Credit Suisse has done for this strategy is to look at what's behind the growth in infrastructure, what's needed, what are the sort of fundamental drivers beyond just wanting to have nicer roads or a bigger airport. And so we've broken that down into these 3 categories of infrastructure and sub-themes that are sort of underneath these that are driving it. And so I want to talk a little bit about that because I think through this, you'll understand and hopefully get excited in the way that we are about the companies that we identify in this strategy. Under utilities and energy, this is all about climate change. We need climate action. The move to renewables is huge. Green hydrogen is so needed. We need to understand how to capture in batteries solar energy that's produced that's perhaps not used immediately. Carbon capture storage. These are the kinds of things that are really going to transform and roll back the clock on climate change. And about half of this strategy is dedicated to this space. If I look, for instance, at Biden's Build Back Better plan, which is not to be confused with the Philippines Build plan, which also has an allocation in this way, it's all about green energy, 21st century clean energy. So Biden has said infrastructure projects must be about future-proofing and climate action. In the same way that actually Duterte's plan, which is ongoing now, is very much about any energy and infrastructure leading to economic development in a much more sustainable long-term way. If we move to the communications section, that again is about its smart cities. And smart cities means, 5G, it's the Internet of Things. It's, my mother got a new oven. She says that she can be at the grocery store and she can turn on her oven from her phone so that when she gets home, she can put dinner in the oven and it's already hot. Now, that is one small example, and frankly, I'm not sure that anybody needs to turn the oven on from the grocery store, but the way that everything is connected is really key to the way that we are going to be able to develop economic growth, to allow people everywhere access to the internet, to the cloud, so that whether you're in remote parts of a country or whether you're in the middle of the city, you have that same access. So everything from communication networks to satellites, that all needs to be supported. And again, is going to drive infrastructure investment. About 1/5 of this strategy is focused in this bucket. And then if we move to transport, which is about mobility, if I look at Duterte's plan, Iloilo Airport's getting a makeover, Cebu Airport is getting a makeover, Clark in Manila is getting a makeover. You're seeing ports expanded in places. You're seeing lots of expressways and highways. So I think governments understand that getting goods from A to B, expanding ports, ensuring that your domestic economy as well as international can benefit from this mobility piece is essential. And the more that you do that in a smart manner, whether it's, thinking ahead to self-driving trucks that can take large amounts without a driver and using electric energy, all of these things are about future-proofing and embracing what might come tomorrow. If we could turn to the next slide. There's a lot on this slide, and so I'd love you to read it, just not right now. What I'd like to point your attention to is that infrastructure gap. So the infrastructure gap is not just in roads, it's not just in communication, it's about bringing those things together. If I look to China, their top 5 infrastructure projects right now are 131 billion US dollars. That's just the top 5. Now, China is always an extreme example because their go-to is to spend on infrastructure. But even at a fraction of that amount, and you multiply that by the 200 plus countries in the world, that is a significant amount of investment that we want investors to benefit from. And we want companies that are doing this in a sustainable green way to benefit. So even a company that may be providing pipelines for old style energy, they can do that in a better way to ensure that those pipelines do not disrupt the animals, the plants, and the communities around them as they move energy. Because you still need to get it from A to B, but how can we do it in a better way? And how can we do that as well as supporting renewables to come in and take over and sort of, move us from old to new? So this just shows you sort of the trends and that kind of journey that we're all on together. If we could go to slide 6 now, I'd like to give you some concrete examples. So we've talked about climate change. We all know that it needs to be dealt with. And finally, governments and politicians are really signing up to make decided changes to meet these goals. So this is everything, of course, from solar panels to wind turbines. And as I said, it's also about supporting old energy. So power grids and smart grids to identify where is there a breakage, where does it need to be fixed, where are there parts of the community that are or are not using as much energy as is sort of being delivered there. So creating an infrastructure in which you can be sustainable and smart about where energy is going and how is also a part of this world. As we develop and support the companies that are leading the charge in terms of renewables, in terms of not just wind and solar, but also geothermal or hydro, which is, pumped, all of these, there's so much technology and so much new innovation that's going into it that people are really going to start to see how that can transform the way that we'll live in the future. So the next thing I'd love to talk about is smart cities. So as you can see from here, there are 2.5 exabytes of data created every day. Now, where does this come from? It might be sending photos of children to your family. It might be investing with ATRAM. It could be teens on TikTok creating videos that go online. All of this creates an incredible amount of data every day, and that all has to go somewhere. So what you'll find is even the largest tech companies in the world are finding that they don't need to build their own data centers. They may rent it. And this goes back to that sort of high barrier to entry piece that I was talking about and identifying leaders in their spaces. We've identified a company that is one of the leaders in this space and has a significant portion of the Google Cloud stored in rented data centers that they own and run. Now, once a company like that has the trust of the largest tech companies in the world, you can be pretty sure that if I or you or another company were going to look for someone to do that for us, we'd go with somebody that Google trusts or that Apple trusts. And so these are the kinds of things that we're looking for and that we feel that people will continue to benefit from. And data centers is one example, but you also see that to create an infrastructure where everyone in the world can have access, to create that environment where economic growth can happen, regardless of whether you live in central Manila or on an island down south, you can absolutely connect. You can have access to 5G, which means towers, it means more cells, and it means cables. So all of these are areas where we are really focused on making sure we find the best and the most sustainable companies doing this. And the last example that I'll give you is around mobility. And this is really about sort of COVID recovery. We're already starting to see this, certainly in Europe and to some extent the States, where there's a lot of air travel. I think most of you, like me in Asia, we've not had that same experience. We're waiting for that reopening when people are sort of healthier and trust that they can get on a plane to do that. But this is just an example. We can sort of see the future, that levels are so depressed at the moment that now is a really good time to look at investing. And you see all over the world, airports are getting makeovers. So you've seen LaGuardia in New York. Again, we mentioned some of the Philippines airports. It's airports that used to just service domestic flights that are really sort of becoming more international in advance of sort of that reopening. You see roads being used a lot more, especially where there's that connectivity. Again, I point to Europe. So making changes and making that more sustainable, putting more electric charging points along highways so that someone can, use an electric car for a long journey rather than just a gas or diesel powered one. All of these are changes that are happening in mobility and are essential to the way that we invest and the way we look at the future. So go to slide 9, which is probably something that you've seen before. Environmental, social, and governance. These are the building blocks for many, many asset managers to look at. But how we do that and how that comes through in the selection of companies and how we identify leaders in this space is really kind of the secret sauce. So I'd like to turn to the next slide and walk you through that just a little bit. Now, it's easy to exclude. It's easy to say there are certain values we have, certain controversies that a company has, and certain country exclusions, sanctions, etc. We start out, it's a very easy first step to get rid of those. We then look at third-party and our own ESG data. So Credit Suisse has a CEO of sustainability and research, and we have a huge infrastructure of people that are constantly looking at ways that we can make sure that we're more impactful. That plus ESG ratings from groups like MSCI, plus looking at our own thematic research. We want to make sure that what we deliver in a strategy is pure play, companies that are absolutely dedicated to giving you and our investors infrastructure and alignment with the future, with sustainability, with green, with climate action. So all of these things in this piece, this sort of bottom left bucket, have to align and come together. And once we've sort of identified what that looks like, Then it becomes an active ownership discussion. So having those discussions with management, making sure that they're addressing any potential conflicts or issues that they're having from an ESG perspective, using our proxy voting to affect change. You know, just having those conversations and having an open dialogue to make sure that one, we're not missing anything, and two, that those companies are receiving the benefit of an ESG infrastructure investment team that can add value. And one of the more important pieces then is passing that on to you to make sure that you see fully and transparently what we're doing. So you'll see that this strategy has a lower carbon footprint versus a global equities bucket. You'll see far fewer companies that have controversy flags in ESG research in this strategy. And you'll see a sort of bifurcation of growth oriented companies that are doing interesting, fabulous things to make sure that infrastructure can be built, that energy can be delivered, that communication can happen in a sustainable green way. And then on the other side, that you've got these sort of larger companies that have been doing this for a long time. And it's essential to make sure that when they're that big and that influential and that meaningful to a segment, that they can also increase their effectiveness on a journey towards being more sustainable and being greener, and ensure that just because they're the biggest in toll roads, let's say, that doesn't mean that they don't take into account how their carbon footprint is impacting the world. So I'll leave it there because it's a lot of information. But what I hope that you'll walk away with today is that infrastructure is 100% linked to meeting our climate action goals globally as a global society, and also to economic development. So by being able to bridge the old and the new, finding new ways of doing what we've done for so long, and enabling communication, we will be able to bridge a sustainable, greener future for our children and portfolios which are future-proofed. Thank you so much again for having me.
All right. Thank you very much, Christina, for that wonderful discussion. Of course, it was very insightful, especially when you tackled more on the global healthcare. And now, to give us an overview on our newest fund, the ATRAM Global Infra Equity Feeder Fund, we have ATRAM's Product Development Manager, DJ De Jesus. As a product development manager, DJ identifies potential new product opportunities to continue ATRAM's legacy of innovation. Hello, DJ. The floor is now yours.
Thank you, Christina, for the insights that you've given to our audience. And as I said last time, healthcare was only part one to combating the COVID crisis and securing sustainability. We're now in part two, and we can now formally introduce the ATRAM Global Infra Equity Feeder Fund. The fund is invested into Credit Suisse's Infrastructure Equity Fund. The fund seeks to achieve growth by investing into companies involved in infrastructure. The fund is perfect for the moderately aggressive investor, someone who's willing to take larger risks for greater potential returns, but less than that of aggressive investments. The fund not only supports SDG Goal 13, climate action, but also 5 more SDG goals. SDG Goal 6, clean water and sanitation. SDG Goal 7, affordable and clean energy. SDG Goal 8, decent work and economic growth. SDG Goal 9, industry, innovation, and infrastructure. And SDG Goal 11, sustainable cities and communities. Let me give you our 3 reasons on why you should invest in this fund. The fund is targeted, meaning it only invests in companies that fit these sub-themes: climate change, smart cities, and mobility. We'll talk about that a bit later. Second, the fund focuses on share takers, or what Credit Suisse perceives to be the leaders in those themes. Finally, the fund is sustainable, aligned with Credit Suisse's sustainable investment framework. Here are 3 reasons as to why we like infrastructure. First is underinvestment. In the past 10 years, not much investment has really been put to traditional infrastructure. leaving most railways, roads, and airports significantly in need of repair. Second, there are new opportunities in the infrastructure space, given how relevant climate change and 5G are. Finally, and most importantly, governments will be supporting infrastructure to help boost the economy from the COVID crisis. We now go to the fund's three sub-themes. All of these sub-themes address SDG goals 8 and 9. Around 29% of the portfolio is invested in mobility. And as Christina said, most car companies will move towards electric vehicles. So the need for charge stations is going to be a necessity. Mobility also includes the investments to airports, seaports, toll roads, bridges, railways, and freight. Around 18% of the portfolio is invested into smart cities, or basically 5G. These include communication networks, towers, data centers, satellites, and smart grids. This sub-theme addresses SDG Goal 11 as well. Last but definitely the biggest sub-theme, around 51% of the portfolio is invested into climate change. This includes electricity, gas, oil, renewable energy, water, waste, and recycling. This also has the most SDG goals being addressed, particularly SDG Goal 6, 7, and 13. Now let's talk about how Credit Suisse chooses the companies for their fund. The universe that they look at is trimmed through these filters. First, they remove all the companies in the global equities area that have negative environment, social, and governance metrics, trimming the universe to around 39,000 listed equities. As this is an infrastructure fund, they also trim it to companies that have at least 50% of the revenue from infrastructure. That would trim the universe to a little above 200 stocks. Finally, the portfolio is trimmed through bottom-up research of the companies. The fund manager regularly assesses each sub-theme based on the current climate, such as monetary policy, regulatory environment, consumer trends, and industry drivers to really determine the allocation to these sub-themes. The fund manager selects companies with strong businesses and high barriers to entry, which allows them to maintain a strong market position. It looks at sustainability, market position, risk of disruption, and financial health to choose the best businesses. And of course, the businesses itself have to fit and be the winners of the next sub-themes. If you look at the top 5 holdings, here's just a small taste of what what the fund invests in. You have Vinci, a construction company focused on civil, hydraulic, and electrical engineering. Cheniere, a company focused on liquefied natural gas. Ferrovial, an infra company focused on airport, toll, and municipal services. Nexera Energy, a renewable energy generation and distribution company focused on wind, solar, and natural gas. And Acciona, a service provider for solutions in renewable energy, civil infrastructure, water treatment, and reverse osmosis desalination. The fund is heavily invested into the 3 sectors of industrials, utilities, and energy. These are the sectors that benefit while the economy is growing. And as sustainable solutions have been started in Europe, most of the fund is also invested in Europe, but of course also in America via the US and Canada. Since the fund's inception, the fund has returned 130%, and in the past 5 years, the target fund has made an average of 13% per year. But we do note that infrastructure will become more in demand moving forward, which has the potential for greater gains than the past 5 years. The ATRAM Global Infra Equity Feeder Fund will be available on Seedbox also on December 13 for for as low as 1,000 pesos. Since 2018, we were the first to launch thematic products into the Philippine market and introduce thematic investing. Now that we have launched a substantial number of products, we are now happy to launch ATRAM Stories. Your future successes are present stories. Our ATRAM Stories funds have performed very strong. Year to date, our tech fund has gained 29%, our financials fund 28%, and our consumer trends feeder fund has gained 11%. We launched this year the Philippine Sustainable Development and Growth Fund in February, and that has provided a substantial return of 18.1%. In June, we relaunched the Global Equity Opportunity Feeder Fund in peso, having changed the target fund back in April to the first multi-theme global ESG fund in the market. This has also gained 13.4% since the launch. And now we are introducing the latest additions to our ATRAM stories. Healthcare, with the target fund performing 25.3% year to date, and Infra Equity Feeder, with the target fund performing 14% year to date. ATRAM stories. These are the stories of the future. Stories to invest in. Stories of our sustainability. Invest in your future. Invest in our sustainability. Again, the ATRAM Global Healthcare Feeder Fund will be available on Seedbox on December 13, and the ATRAM Global Infra Equity Feeder Fund will also be available on Seedbox on December 13. You can invest in both funds for as low as 1,000 pesos each. Thank you.
All right. Thank you very much, DJ, for giving us more information on our newest fund, and that's the ATRAM Global Infra Equity Feeder Fund. ATRAM has a wide range of investment products, and our capabilities span across several asset classes, meant to service the different investment objectives of each individual. And with these, it was with great pride that we announced that ATRAM has recently achieved 9 industry awards for 2021. The best local fund house in the Philippines, given by Asian Investor. The fastest growing fund management company in the Philippines, given by the Global Banking and Finance Awards and by the Global Economic Awards. The most innovative mutual fund offerings, again by the Economic Awards. The best investment solution provider from World Business Outlook, and the most innovative asset management company from Pan Finance Awards. Would like to add that ATRAM Group and ATRAM Wealth received the editor's triple star from the Asset AAA Sustainable Investing Awards and the Asset AAA Private Capital Awards, respectively. For integrating ESG, that's environmental, social, and corporate governance, in all our investment process. Finally, we want to say that the ATRAM Total Return Peso Bond Fund has been recognized by the CFA Society of the Philippines as the best managed fund of the year for peso medium term FVPL valuation category. For today's session, we hope to have somehow assisted you to hashtag Take On Tomorrow by investing your hard-earned money with an award-winning fund house. At this point, would like again to invite Christina and of course a DJ, as we would like to move on to the live questions from our audience. We received several questions during the webinar, and there are still questions that are coming in. To start it off, the first question is for Christina. Checking Christina, are you on the line?
I am indeed. Thank you so much.
All right. All right. So the first question is for you, Christina. So what is your view on growth rates in the infrastructure space compared to the rest of the market?
Sure. No, fair question. So naturally, regulated infrastructure has lower EPS growth than general MSCI holdings, but they're also considered safer companies in this way, safer investments. And so when you think about a traditional saturated market and in terms of their outlook, there's also very stable cash flow generation that they can achieve, which is what we like to sort of then commingle with fast-growing centers like data centers, where you've got 25% growth in data volume per year, and that's really translated into higher growth of, call it 6 to 8%, in terms of demand for that kind of space. Now, that will have higher EPS growth, but also richer valuations. And then you have the electricity consumption segment, which is kind of associated with, I guess, the boring, more traditional kind of market, and is now actually a real growing business, because as you sort of move from, old energy to new energy, you actually see this ramp up considerably. And so we expect the growth rates also to ramp up. So I think we like to sort of think about that as across the board. You've got high growth segments that are probably, maybe a little bit more volatile. And then you've got sort of the older, more traditional segments, which are less high growth, but are going to give you more stable cash flow.
Right. Thank you very much, Christina. The next question, this one is addressed to DJ. So DJ, what is the best factor to consider in making your asset allocation decision, and why? This is, I think, more of the portfolio management question side.
Thank you, JP, and good afternoon to everyone. It's nice to see everybody here on a Thursday afternoon. And to answer your question with regards to portfolio management, one of the recommended ways really is to look at investing from a core satellite approach. What does that mean? So you have a core investment. Normally, it can be a balanced fund or a multi-asset fund, something that's already diversified. You don't want to put your eggs on one basket, and you reserve maybe like 5 to 20% into things that you would believe in. Things that you've researched, things that you feel are very important to you, because if you invest in something that you know and invest in something that you understand, then it's also easier for you to accept the losses on that part of the portfolio if things go wrong. And with regards to infrastructure, given that this is a specific theme that you want to be able to invest in. And, there's a very strong story to infrastructure, as Christina and I said. There's 3 reasons that we want to invest in and have it on our platform. So really, if you believe in something like infrastructure, sustainability, building green infrastructure, the story of 5G, and this should be, part of that 5 to 20% of the portfolio. And if you're riskier, go ahead, put more into this fund. But to answer your question as to what's the most important part when it comes to asset allocation, it's really understanding your risk profile, your risk appetite, and also understanding if you understand the investment or not. And the more you understand the investment, the better.
Right. Thank you very much, DJ. Especially on the 5 to 20%, you should invest on the assets that you believe in. I think I'll move on to the next question. This one is addressed to Christina. Christina, can you share some of the major secular trends that are tailwinds for investments in infrastructure?
Sure. So I think, as I discussed in the presentation, we sort of look at it in, I would say there are 3 or 4 things. The first one is just the investment gaps. And so you see Duterte's Build program, you see Biden's Build Back Better, seems to be a B theme involved in all of them. But, these sorts of investments that have been needed for quite a long time are focused on economic growth and also on sort of 21st century clean energy and technology. And as DJ said, 5G, bringing all that together. And so that is really, I think, one of the things that is going to propel for the foreseeable future a lot of investment in and growth in companies that are involved in this segment. So climate change is a big piece of that. I think we talked a lot about that during the presentation, so that's no surprise to anyone. mobility. So again, the electric vehicles, right now it's fine to have those if you live in a city, but if you want to take a road trip to see your family somewhere else, you may not get there without having to recharge, right? So you need to have these power points along the way. And so kind of getting that into more rural communities, and that's everywhere globally. Maybe not in Hong Kong, we're all pretty central, but elsewhere, I think, connecting the dots is really important. And lastly, that smart cities piece. So being able to give everyone access, as people move into cities, and I think by 2050 that about 70% of the world's population will live in and around cities. And so in order to make that possible, you've got to have roads that have capacity. You've got to have public infrastructure, whether it's trams or trains or buses, all of that has to sort of work together to get people from A to B. And again, that sort of connection around data centers, data that's being created, the jobs that come along with the proliferation of smart cities. So all of those things, I think, are really where we see the main growth and what we're really excited about in this strategy.
All right. Actually, great insight, especially on the the future cities where the everybody should be connected, and of course the trans in terms of transportation. And there's a follow-up question actually pertaining to that one. Has the
Sure.
infrastructure investment theme evolved over time as compared, of course, before in the previous years?
Yeah, I mean, I think that the definition of infrastructure has evolved, and I think people have always thought about roads and highways and trains, planes, and automobiles, as well as energy delivery as being part of infrastructure. And now I think as economies evolve and as big tech, disrupts all forms of our life. You talked about healthcare here. Some of the other themes that you have in this strategy are also, being affected by a disruption of technology. That changes, therefore, the ecosystem of what we need in order to thrive and what we consider basic necessities. I think most people would consider having a phone and having internet and having some sort of device, whether it's your phone or a tablet or something. Most people would consider that really fundamental to even education now, as we have homeschooling happening, things like that. So the definition of infrastructure has changed because economic drivers have changed. And so the fund has naturally evolved to meet those needs, but has done so when I think companies get to a point where we see them as being leaders and we see economic growth and development backing those companies. We're not looking to sort of, invest in something that's a new great idea but hasn't been proven and doesn't have demand.
All right. Thank you very much, Christina. So actually, as I can see at the moment, the Q&A button really is we're receiving lots of questions. So our audience, again, thank you very much for sending those in. We hope to tackle everything before the time ends, but this shows that it's the theme right now in infrastructure investment is really something that we are looking forward into. So moving on, DJ, I think this question is for you. What companies or countries is the Global Infra Equity Feeder Fund invested in?
So I mentioned the top five. I'll name a few more companies that this fund invests in. So you have things like Enbridge, which provides energy transportation, distribution, and related services in North America and internationally. And this company operates crude oil and liquid pipeline systems. So part of infrastructure is really being able to deliver crude oil, from the plants to the consumer. So we're not, looking away from companies that provide crude oil. Even crude oil companies, energy transportation companies are very important in the infrastructure space. Another would be FH, which is a contractor and concessionaire that operates numerous business lines, particularly in the public-private partnership space, construction, public works, energy, and metal. You also have something like Cellnex, which is an independent operator of wireless telecommunications infrastructure and broadcast infrastructure. So you'll notice that it's really broad. You have things that are for mobility like FH, something for climate change like Enbridge, and something for smart cities like Cellnex. So the types of uh, companies that this fund really invests in are particularly those that really fit the themes of climate change, smart cities, and mobility. In terms of countries, let me just share my screen. All right. And sorry, this will stop sharing. Okay. So as you could see, the different types of countries are really more on the developed worlds. You'll see a big chunk in the US, but a bigger chunk really to Europe, because Europe has been spearheading the climate change action. And you'll notice that a lot of the companies really come from the European space.
All right. Thank you very much, DJ. I'm just waiting for the team to. Okay, we're back to the main slide. But again, yes. Thank you very much for giving more color, especially on the companies and of course the sectors that the Global Infra Equity Feeder Fund is invested in. Next one, I think Christina, this is for you. You mentioned Joe Biden earlier, and the question has popped in. The U.S. President Joe Biden just passed to a $1 trillion infrastructure plan to overhaul the nation's transportation, water, and broadband infrastructure. So, what is your view on this? And do we see similar initiatives elsewhere in the world?
Yeah, thank you. I think definitely. I mean, there's been a lot of talk about Biden's plan, and the U.S. I'm from the U.S. It's a very large country, so to get from one side to the other, to get things from one side to the other, to make that sort of work better, to connect what has been a real economic disparity of the coasts being sort of tech and finance, if you will, just to oversimplify, and sort of the middle of the country not really being able to sort of gain or benefit in the same way from those trends. I think this is an idea of how to fix that, how you employ people in the same way that I just looked online, and under Duterte's plan at the moment, there are 337 job openings if anyone is in the market. So it's about creating jobs and about servicing this, and Biden's is the same. And most countries have that. There's always a way to improve how you get things from A to B and how you connect people, and how you make sure that those who are not in cities can still benefit from the economic development and growth. And so I think, that has all sorts of other, ramifications around how people feel about their politicians and how happy people are, right? If they feel like they're benefiting from the overall growth and development of the country, they're obviously going to be happier. Being closer to schools or having access to education, all of these things really blend together. And I think, Biden's plan is very much on addressing climate change, green energy, and having jobs associated with that, and, being able to fulfill some of this made in America. Whereas I think most countries have their own brand of doing that. It's just Biden's perhaps been more in the news.
All right. Thank you very much for that, Christina. So we'll just move on to the next question so that we can tackle the questions that were sent by our audience. Next one, this is for DJ. Is the fund, so this is in reference to the Global Infra Equity Feeder Fund. So is the fund invested more in the developing countries or the developed market? Is there still room for infrastructure growth in the developed markets?
I alluded to this in the presentation, but I don't think I elaborated too much. I also said that most of the countries that this fund really isn't invested in is in the US and Europe, particularly the developed markets. So to answer the question with regards to is there really room for the developed markets to really take in infrastructure? And the big answer is yes, particularly because you need to build all these new types of infrastructure, want to build the smart cities like 5G, be able to add capacity to our internet speeds and really make the transmission of data become faster. So the high need for technology is going to need, add to the need for more infrastructure. Another area is the new types of infrastructure that climate change and readdressing climate change brings. So you have renewable energy infrastructure that you need to put in. You need to be able to have like carbon capture to lower the emissions, and then you have electric vehicle charging stations that need to be put up so that electric vehicles can supersede the current automotive business that we have here that uses crude oil. So there's a lot of infrastructure that needs to be built, and the developed markets has a lot of infrastructure that needs refurbishing. And you have that underinvestment in infrastructure for the past decade. So a lot of significant repairs need to be done on a lot of the airports and all of the railways. So clearly there's just a lot of room to be able to expand on in the infrastructure space.
Right. Thank you very much for that, DJ. I will go back to Christina. Since you discussed the U.S. economy, especially on Joe Biden's plan, there's a question here, but more pertains to the rest of the world. So, with the world having a concrete plan to transition from a fossil fuel generated world into a more sustainable and renewable energy world, are you concerned with implications of this from developed economies down to the emerging market economies, of which some might say could trigger an economic recession? How is the fund to be positioned on this risk?
Sure. I mean, I think certainly there's been a lot, especially recently, around greenflation and the rising cost of goods. I don't think that's wholly attributable to just the rise of kind of climate action and renewable sources. There's a lot around supply chains and, a lot of other factors around COVID that I think has contributed to that. I am not an economist, so I would not pretend to break that down for your audience. But I do think that greenflation is certainly a concern in terms of the higher costs that are needed, let's say, to build a large solar plant. But, research is kind of tilting towards that being a kind of transitory cost, and that sort of once you get past that, actually, it can be offset by economies of scale. So doing more of this means that naturally costs come down. And also the fact that, I work for Credit Suisse, we have targets in terms of the financing that we want to do for these types of projects, and so do lots of other lenders. So that also helps to bring the total cost down. I think if you started to see that happening, which we think it's happening individually, but perhaps not at like a strategy level across the board in all of the companies we look at. I think if you started to see that happening, then you'd start to see governments come together as they did in COP26, but to sort of talk about how do we make sure that the whole world can benefit, because it's not just the developed markets that we need to go green. We need the world to go green, and there are far more emerging economies than there are developed. And so I think that would be the conversation.
All right. Thank you very much, Christina. So I'll move on to the next question here. I think this is still for you. Regarding ESG principles, how often does Credit Suisse evaluate the holdings in terms of like when you add or drop companies from ESG funds under it?
Sure. So we have a very rigorous process, and I know that you guys will provide any interested clients with more detail on what that looks like here. But the way that our teams typically look at this universe of companies is to look at norms-based exclusions, to look at ESG data integration at the strategy level. So we would naturally exclude companies that sort of didn't meet those standards. As I mentioned, sustainability and ESG is a huge core principle of Credit Suisse's bank-wide strategy, and asset management is no exception. And so we look at that constantly. If there are flags that are raised on any company that we are looking at, that would be very carefully considered. There are conversations with companies in our universe constantly to make sure that we're not missing anything. So I would say that that is a really iterative process, and it's constant. It's not a sort of we do it and ignore it and come back to it later. And we put that out. So anybody that invests with us in this strategy has access to our ESG reporting, and we think that's really important in terms of transparency.
All right. Actually, that's great news in terms of transparency and the way you do things. It's more prudent in a way. Yep. I'll move on to the next question.
Absolutely.
Yeah. I think this one is for DJ. When is the launching of ATRAM Global Infra Equity Fund, and how can we invest in this type of fund?
One, thank you for the interest. It means that we did our job. Christina and I did our job. So the fund will be launching on December 13. Mark your calendars. December 13, this is next Monday already. So as soon as Monday, you could invest in this fund and the ATRAM Global Healthcare Feeder Fund for as low as 1,000 pesos. You heard right, 1,000 pesos on seed box, December 13. Mark your calendars.
Right. Thank you very much for that, EJ. Again, guys, do not forget this coming Monday. This is the second to the last question, and I'll address it to Christina. What would you say is the biggest risk of investing in infrastructure, and how do you deal with the risk?
Sure. I would say that if you think about infrastructure, we look at publicly listed infrastructure companies. So these are not individual projects, which are a very different, risk-reward profile. So I think probably the biggest quote-unquote risk, and especially something that we're seeing, are things like inflationary pressures, monetary policy, and just market sentiment and views. So the companies that we saw make great gains, let's say last year, this year may not have if they were in, let's say, a growth bucket, where the rotation away from growth takes nothing away from the fundamentals of a company that is growing, but just by virtue of the way that the market has behaved, they haven't been as strong this year, where we've seen companies that are in sort of more of the old infrastructure, the cash flow and revenue generating kind of infrastructure, those have done better this year. So I would say that it's really just that you are investing in equities when you invest in companies that are publicly listed. And so stock market behavior and volatility is naturally going to be a part of that.
All right. Thank you very much, Christina. So would like to thank everybody for sending in questions. We received lots of questions, but in the interest of time, we right now during our webinar, we will take this last question. But then again, thank you very much for being interactive, and of course, sending in your questions. It makes it shows that all of us here in this room right now are really interested on upcoming funds. I think the last question is for DJ. What makes the ATRAM Global Infra Feeder Fund interesting to invest in compared to other feeder funds available in the market?
Thank you for the question. And we wouldn't be pushing these types of funds if we didn't think that these are very relevant stories that we need to be investing in. Again, I'm saying that we launched our ATRAM stories line, and these are really stories that you'd want to be investing in. But why this other than any feeder in the market? I think this is really the first feeder in the market that has a big focus on one of the biggest problems today, which is climate change. And this is one of the few funds in the market, or the only fund at the moment, other than our Philippine SDG, that directly addresses climate change and how we need to be able to, make our environment sustainable. So, given that this fund directly involves companies that are trying to work towards reducing carbon emissions and really working towards climate action. That's one big reason for this fund. And I think the second big reason is that infrastructure is one of those funds that is defensive in nature. Infrastructure is going to be very important to people, and it's really going to be important for governments moving forward, coming from all these financial problems like inflation and the COVID crisis. It's important for governments to keep economies afloat, and infrastructure is the number one way the governments are able to keep economies afloat. And infrastructure creates new jobs, and with the new areas for infrastructure, you also have new types of jobs. And that's really going to be good for the economy. It's really going to be good for our environment, and that's going to be good for our futures. So with that, please invest in the ATRAM Global Infra Equity Feeder Fund.
All right. Thank you very much for that, DJ. Yes. Of course, I would have to completely agree that infrastructure is a defensive strategy, and it creates jobs, especially right now during the given COVID-19 pandemic. And what as has Christina has mentioned earlier, that the Duterte's build program has already created like around 300 plus employment opportunities out there for everybody. I think that's the last. That is all the time that we have for now for the questions. Before we wrap up, any last words from Christina and of course DJ?
No, just thank you so much to the team at ATRAM, to you, JP and DJ, for having us here and for allowing us to talk to everyone about infrastructure. And, a very happy Monday to everyone and a festive holiday to follow after.
Right. Okay.
And thank you for all the questions. Thank you for your time. We really enjoyed entertaining all these questions, right, Christina? And this is a good yeah, definitely, right? And this is a good opportunity for everyone to be, invested into something that focuses on green sustainability. And just remember the date, December 13. That's when we're launching this fund and the Global Healthcare Feeder Fund. So see you then.
All right. Just to echo on what DJ has mentioned, please do not forget December 13th. Once again, thank you very much, Christina and DJ. And of course, thank you to all our audience. We appreciate you all for taking the time in joining us today. Hope you were able to gain insights and key takeaways from today's webinar. I'm sure you guys are interested and want to know more about how to invest in the Atrium Global Infra Equity Feeder Fund. Please stay tuned to know more.
Hello. To open an account with ATRAM, just visit our website at www.atram.com.ph. Here, you can learn more about all the funds and services that we offer. Our site will then guide you to our online investment platform, Seedbox, where you can start investing for just 1,000 pesos. But if you have more questions, visit the website's Frequently Asked Questions page or ATRAM Academy page. Thank you.
All right. There you go, everybody. If you have any further questions or would like to learn more about ATRAM, please do visit our website. That's www.atram.com.ph. If you have any friends who you think would like this webinar but are unable to attend, feel free to share the YouTube replay of this session. Visit our YouTube channel, and that's ATRAM Studio. Scan the QR code to visit our official social media pages. Would like to invite you all to join ATRAM's official Viber community group, that's hashtag ATRAMPH community, to stay updated on the latest announcements, advisories, and reminders. Scan the QR code or visit the link found on your screen and get a chance to win ATRAM merchandise. Lastly, please answer the survey at the end of this webinar. We would love to know your thoughts on today's topic. On behalf of everyone at ATRAM, thank you again for your attendance and participation. We wish you and your loved ones continued safe and healthy. Have a great day.